And an explosive crypto move has just taken place. As you can see, Bitcoin is narrowly just holding above $30,000. And as a result, the altcoins have started to pop as well. So we're going to address in today's show, is this a trustworthy breakout? Has it been confirmed yet? And if so, where's the next target? So let's get straight into the show. And I wanted to start off with this guy. He must be very happy today because after being down with $2 billion, he would finally be back to break even with his Bitcoin exposure. That's 𝗫𝗿𝗄𝗍. And then another interesting tweet which I saw was this, that essentially Bank of America and Fidelity were actually purchasing MicroStrategy stock in Q1. So indirectly, they actually own Bitcoin, which is also pretty interesting. But that's not the most important thing. The most important thing is definitely the price action and the charts over here. So if you take a look at the charts, you can see there it is. Bitcoin's at $30,075. So we eventually got the breakout. Yesterday, I outlined that this was ultimately the range that we were looking at. And based on these three doji candles over here, weekly candles, we were expecting an expansion either to the upside or the downside. It looks like Bitcoin has chosen its direction and moved towards the upside first. Now you're looking at where's the next draw on liquidity. So this was the future range that we had kind of identified would most likely play out over the next coming weeks to months. And ultimately, that's what you want to focus on. So price is most likely going to operate within this range over here. I think that it's more or less confirmed. The range low, 25,396. The range high coming in at 32,376. And that is based on this drawn liquidity, which is coming on the left-hand side as the new possible range high. So that's your weekly chart over there. All in all, everything is looking fantastic for Bitcoin on the higher time frame. Any pullbacks that happen over here are going to be opportunities to buy the dip because you have a lot of support, which you also identified yesterday, coming in this region from the moving averages, which are constantly rising with each passing week. And we identified that 26,000 to 27,000 would be very, very strong support. And the likeliness of even coming back to that 25K region is not that high at the moment. So why did I have a bullish bias over the last couple of months? Well, one of the main reasons was essentially this. And I say to you guys multiple times, please listen to me. This is how you can tell that there is a shift and a transition taking place in the market. So you had the peak of 2021. Of course, the market came down. Inflation started to take off. Interest rate hikes started to come into play. You had the Ukraine invasion, and that led to the massive sell-off. Okay, then you had small pump there, and then lunar collapse, big sell-off. Then you had the Celsius collapse and June capitulation. Everything that you look at in the on-chain metrics department would have suggested that this would have been the ultimate, or at least this, would have been the ultimate bottom. But then when you had the FTX collapse, it sent price a little bit further. But what you'll notice over here is that with each increasing magnitude of disaster from a news perspective, right? So what the media portrayed to be like, the price was dumping less and less. So these were the two biggest. FTX was a little bit less than these two. Then you had the Silicon Valley banking collapse as well as all the other banks. And look, not even an as big drawdown over here compared to the previous ones. So that was your very, very first warning sign that the market is now moving into a transitionary phase, and we're moving out of that extreme bear market phase into a more sideways movement, and you're looking for possible reaccumulation. Now, Willy Woo just updated a whole bunch of tweets. So if you guys are unfamiliar with Willy Woo's like the OG and original on-chain analyst that's out there. So he has about 1 million followers. Now we have that Dylan Leclerc and I forgot the other guy's name, but those guys, the new guys, he's the old kid on the block over here, and he says that the BMI, which is not your weight, but it's the Bitcoin macro index, just crossed above the lower blue band, suggesting that the reaccumulation phase of the cycle has just begun, i.e. that the bottom has formed. Smart money investors are accumulating and rejecting further lows, creating low volatility bottom. Price moves up in a choppy and sideways bullish manner. So there you have it. The BMI just broken back above that blue band over there, and that means exactly what he said. It doesn't mean that you're going to go straight up from here, but it's choppy sideways and upwards movement. Okay, moving on. He also shows over here, if you look at the cost basis of the short-term and long-term hodlers, it's giving a similar view. So bottoms are signaled when the short-term hodlers, the recent buys, got in cheaper than the long-term hodlers, and we are now moving out of this regime as indicated by the purple ribbons on the bottom over there. It looks exactly like the previous major market cycle bottoms that we had. These are the value zones. That's where you want to be at least dollar cost averaging into the value zones. You don't want to be dollar cost averaging when these metrics are up here. Ultimately, you want to look at this for when to at least start scaling and not just max bidding. He says April will be an interesting month to watch. The order book liquidity is thinning out, and there is a big liquidity gap from here all the way to $40,000. So volatility ramping up is a near certainty. So expect volatility in the market. Any of those pullbacks, I think, will be opportunities to layer in additional bids. And I'll show you a strategy later on in the show that you can use. If you're somebody that doesn't have that much time, you don't have time to sit and watch the market constantly, I'm going to give you a strategy which you can deploy your capital into the market automatically almost. So he says, if you look here as well at the Bitcoin cost density map, that basically is a contour map of investors' cost basis, which he says is looking very, very healthy. Everything lines up with what we've seen in the previous cycle showing accumulation. Here you look at the price stability forming a peak. This is probabilistically a prelude to a big move, which usually happens within a week. This was posted 23 hours ago. So he is suggesting that whatever this move is that we're having at the moment, it could have a lot of legs still behind it. It's not yet over. And feel free to go and check out his page over there. He does give a lot of that info out for free. Another thing that was also important to consider with regards to the market dynamics was the Grayscale investment premium. So, or at least should we call it the discount. We said and we identified months ago that once this starts to move from an extreme discount towards the premium side, so closing that gap, then that would be a sign that the market is possibly gaining some strength, because institutional players would be more inclined to buy GBTC at a discount than they would to actually buy Bitcoin, right? And therefore, if this is closing, it might be an indication that those institutional players are jumping into the market. Remember, they only let us know months down the line. They never really let you know before. And by the time they let you know, that's usually when they're already starting to offload their positions. So nevertheless, we continue to dollar cost average. I received a bunch of tweets yesterday of people asking where they can find this portfolio that I initially created on these coins over here. So I'll just show you over here. Basically, quickly updating you on the Bitcoin position is up 20% over here. Then we have the other 1 year portfolio is up 21%. That's the gaming one. And then the normal one is still, or it's down 0.5. So it's about break even. So here's essentially, if you look, let's just quickly go back. I don't know what happened there. Go back to bots. Let that load up. Okay, let's quickly go back here. I'm going to just put my cursor over. You'll be able to zoom in and screenshot that. Those are the coins that are in the 1 year portfolio. These are the coins that are going to be in the gaming portfolio. And then obviously Bitcoin is just pure Bitcoin. So that's just an experiment which we're running with the bots. I said I'd let you know how it works out to show you the power of dollar cost averaging if you just buy little by little in a very disciplined fashion. And we're going to run that for an entire year. And we'll come back after that and see where we're at. Okay, the 𝗵𝗆𝗍 score also is something that we've looked at. It's a very important indicator over here, which is very, very healthy, suggesting that price is moving up. Again, just another confluent indicator that you can use in line with the previous macro bottoms that have taken place with Bitcoin. The 4-day chart, yesterday I showed you that the green moving average, which is the medium time frame moving average, is starting to rise up, and it doesn't look like you're going to get a pullback directly into that level. So this is increasing rapidly now, and this is showing in line with what Willie Woo just said, that a potential very strong trending move may start to take place. So far the breakout looks to be very, very real. You have the 4-day close, which literally just took place, and that is incredibly bullish. You cannot deny it. There it is. It broke this level, which was clearly capping price to the upside. That's 28,200. And in the same way that we had it down here, so the way that price was being capped over here, eventually you had the big breakout and you established a new range. Price got capped over there, and usually you don't get many chances for price to come back down and to basically re-enter into those positions. So we need to see, where does this move end? It could end but around that $32,000 to $33,000 region. Now, for those of you who have watched for a long time, I will also say that you might remember that I said one of my main cases that I'm looking for is a potential push into the $30,000 region. But once you get into that level, and that was based on the order block, which is coming on the left-hand side, I said once you do get into this zone over here, it definitely would be time to be more cautious, at least from my side, because I'll be watching in case there is some sort of a deviation that comes back down like that and price comes back down. That would be an enormous trap, because at the end of the day, this is still a lot of resistance, right? All of this over here is a huge amount of resistance, which Bitcoin obviously has to try and overcome. Just quickly get that away. There we go. All right. Let's move on to the next chart over here, which is the Ichimoku cloud. The Ichimoku cloud, everything looks pretty strong over here. We did quickly touch on it yesterday, but for those of you who were not regular viewers, because it was a public holiday in most parts of the world, I'll just very quickly reiterate what I was saying. So basically, we had the cross over here on the Ichimoku cloud, bullish cross, and that was suggesting that when price pulled back into here, you wanted to go fully long. You went fully long off of this, and you'd be holding those longs, because if you look at the ADX, the average directional index, it is increasing up, and you have the DI positive, which is the green one for the bulls, also up, but you have the ADX above that trending upwards, while you have the bulls the bears one, which is the DI negative, the red one, is continuing to contract to the downside. This basically means that bulls have full control. That's all you need to know. This indicator basically tells you bulls have full control at the moment, and it looks like they could really run this a lot higher still. Okay, one other trade that I gave, sometimes we don't only trade crypto, we look at other things. Natural gas, the position is up. Just to quickly update you guys, this is a swing trade position. We're holding it for longer periods of time, but we're looking to layer our orders around this area based on the long-term trend line, which held since the 2020 lows, as well as the range high over here. That trade is in profit. If you do, for some reason, want to trade natural gas, oil, gold, any other commodities or Forex pairs, then feel free to check out PrimeXBT. This is where I've taken the trade. So here's my position. Small position, $1,365, because it's very highly leveraged. This could result in about, if it reaches my take profit, I'll be looking at about $6,000 to $7,000 profit, which is pretty big off such a small position over there. So there is a link in the description below. Just go through there, type in the promo code Kyledoops if you want the sign up bonus. Okay, cool. Moving on. S&P 500 still coming into range high. So we had a small dip down, rejection off that level, and you can see that price is now pushing back up again. With tomorrow's important high impact economic data coming out, which is the inflation, so the CPI month on month and year on year, this will definitely be a driver with regards to what the stock market does. Let's just see. We'll just observe at the moment. I'm not trading the ES or anything like that, ES1, which is the futures chart for the S&P. I'm just using it as kind of an additional factor which helps me get direction on Bitcoin. So at the moment, I'll be interested when it gets back here. Otherwise, I'm interested when it gets to the 75% of the way through the range, which is this dotted line over here. It's in the middle of no man's land, not really worth mentioning at the moment. What is at extremes, because we pay attention to charts that reach extremities, because that's usually where a trade opportunity comes into play. And at the moment, you can see, if you look at the Bitcoin dominance has now come directly into that range high. So you can see the previous times that it came into this zone, obviously it broke down, right? Now it's important, the more times you hit a trend line, the more likely it is that you're eventually going to break. So the question is, will this time be different? But look at the gaps here between the last time that we hit. So this is many months. That allows this trend line to almost re-strengthen. It's like when you play these computer games and you get shot and you go to the respawn station and you can respawn. That's essentially what happens over here. So this might be a strong trend line still. I'm not sure yet what's going to happen over here. I'd wait for a close. That's how you'll get direction. Wait for a high time frame close. High time frame being something above a 3-day to a weekly. If you start to close outside of this, then it's a possibility that the Bitcoin dominance is going to go much higher. In that case, of course, altcoins are not where you want to be. They're going to get absolutely smashed. And Bitcoin dominance could, as scary as it sounds, for your altcoins, potentially move all the way up here to about this 58% area. Okay, if though you start to see a turnover, then you'll see altcoins catch a bid very, very quickly. So what I mean by turnover, well, a deviation would be something like this. Of course, if it starts to roll back over like that and you start to come back down towards the mid-range, that's probably when you see Ethereum running all the way well past $2,300, $400, as well as your other altcoin pairs will start to do very, very well. But we're not there yet. It's too soon to tell. It's just something that's reaching an extremity, which means we can watch it now. It's on our watch list and we can see what happens from there. Okay, the dollar, DXY, still pushing up, still looking for something like this. Basically, chart self-explanatory, potential push to the key yearly level at 103.49. We reevaluate from there. If it can clear that, then you're looking at about 104.8. Okay, let's just get that thing away again. My gosh, these Macs can really annoy me sometimes. All right, the total. This something new also happened over here on total. As you can see, total has started to break out. Let's quickly move on to the daily. Did we get the daily close above that level? So we did indeed. So the breakout is starting to look real here for the total market cap. We are holding above this area. I can obviously on the daily, you can move it a little bit higher, but nevertheless, you can see this candle is an outlier. If this candle closes above the prior candle, which we had yesterday, then you can say the breakout is now officially confirmed. And that means that any pullbacks that come from there are opportunities to get back into the market. If total goes up, the whole crypto market goes up. The next level of interest would essentially be here. So if you do see a pullback like that, you'd be looking at your next level. Let's change that to white at 1.326 trillion. If that does happen, you'd expect that the next ones to go are going to be the other charts. Let's move back onto 3-day, which is going to be total 2. If total 3 starts breaking out convincingly, total 2 is most likely going to push to range high. In that case, Ethereum goes up. Total 3. Also, you would expect total 3 would break this level over here, which is the lower highs that are formed throughout, as well as the strong horizontal, which is also the range high of that chart. And that's why I said don't chase. You don't need to chase yet. Just wait, be patient, wait for price to come to you, wait for this to break out, come all the way back down. On any retest, you'll get your chance to load up on altcoins. Don't be fearful that you've missed the boat on altcoins. Okay, something interesting to watch, which could potentially provide that pullback. If you look over here from this Dan crypto trades, he says here prior to the last month's CPI print, Bitcoin broke above the important $25,200 range. This time we broke above the very important $28,800 range. Could we see some fake outs and hunts surrounding the CPI similar to last time? So this is what I was saying. If you are looking for a potential entry into the market, your hope would be that the CPI creates some sort of liquidity hunt, and basically where the price is going to get messed around both up and down, and you could potentially layer some of your orders. So I'd be looking to layer orders from about $28,000 to about $29,000. And one of the best ways that you can do that is using BitGet. So this is the strategy. They have an AI strategy. There's the APY and 7-day grid, gives you 324%, pretty damn good. But I would just put in a manual creation one over here, and you want to go on the grid strategy, and then you just put in your lowest price. So you're looking, let's say, I would say 20, I would actually even go as low as about 27,600, because if it's on a wick basis, I'd be happy for that. Let's see if I can zoom in to show you all of this. And then your highest price, you're looking at about 28,800. So now it will spread grids. You can put as many grids as you want there, probably about 5 5 grids is enough. That means you'll place 5 orders, select the amount that you want, the capital that you want deployed. And if that pullback comes and it happens very, very quick like this, then BitGet could be your place to go in order to capitalize on that grid strategy. If you use BitGet, you also get into the Discord, by the way. They have a sign-up bonus of $8,000. Use the link in the description to claim that sign-up bonus, and then that will take you through as well to the Discord. Here it is on the bottom that you can enter there. That's where we give live trade setups. Okay, moving on. So if we look at Bitcoin over here, on a daily chart, this was the range that we were looking to have established. Here's the order block once again highlighted, which led to the major breakdown, right? So basically, any pullbacks that come into this gray zone are going to be opportunities to load up. I think that they'll be short-lived. How do you know if this is a trap? Well, if you start to see price come below about that $28,800 level and close there, then this is going to definitely start to look like a major deviation, right? So that's going to look like a major deviation back down, and then you would probably go all the way back down to 25K. But for the time being, from what I'm seeing, from everything that I can see, and I'll show you more now, it looks pretty healthy, and so far it looks like there will most likely be continuation over April into the higher $30,000 regions. Okay, so let's look over here. One thing that printed, which was on the 6th or 7th, 6th of April, so a couple of days ago, bull moon. Don't fade the moon. Don't fade the moon. The moon controls the tides, and your body is made up of water, so it's no wonder it has some sort of a strange effect. I don't really know how it works, but there it is, the bull moon printed. There's the bear moon. It allowed for a little bit of a pullback. So the way that I treat this, by the way, as strange as that sounds, I don't trade off it, but I kind of use it just out of interest to see where the market's going to go. So what I do is, if the market is basically in an uptrend with higher highs and higher lows, then I take the bull moons pretty seriously. I almost negate the bear moons in an uptrend. If the market's in a downtrend, I take the bear moons very, very seriously. When those prints, I know over the next 2 weeks, there's likely going to be a lot more downside. So basically, what am I saying? Well, we've had about a week of this already. Is it a week? Not even. How many days is this? Quickly go. We've had 5 days, so almost a week. We've almost had a week of the bull moon. It lasts for 15 days. What does that mean? Over the next 10 days, I expect there's still going to be further upside because it printed. I expect more upside. Okay, let's look over here though. The funding rate is extremely positive, suggesting that longs are jumping into the market. And basically what that means is that usually they're going to get tested at some point. But this can hold up for longer periods than you can imagine. Let's quickly look at the weekly. I'll just switch it. See what the weekly looks like over there. Okay, so anytime that it goes extremely negative, those are your opportunities to get your longs in. And you have to take this with context, right? So if you see negative funding in an uptrend when the market is flipping bullish, those are your opportunities to load up on your longs. As you can see over here, the last time we were negative, Bitcoin price went down to about 27,895. And now we had a massive push up. On the weekly scale, you can see that the positive funding over here is quite aggressive and extreme in comparison to the prior times. So obviously don't be surprised if there is some sort of a pullback that comes from that to flush those players out. Let's look at the 4-hour chart of the long to shorts over here. So currently still have guys trying to short the market according to this. From CoinGlass, you have 52.4% of the players are currently short against the longs. If that is in fact true, if this is reliable data, I still am not 100% sure how reliable it is. I think it's okay, but I can't obviously put my heart on my chest and say it's 100% accurate. But if it is, then this would suggest that there's still a lot of shorts that could get blown out over here, and therefore price can squeeze even higher. It's definitely a hated rally at the moment, and most people don't trust this rally. All right, yesterday I did outline to you, if you do look at the open interest chart over here, using the cumulative volume delta on the spot, I said, look, spot, we're pushing price up. And if you look on the downside, or at least, sorry, on the below chart over here, then the futures traders were trying to short the market. I said, if I had to pick a side, I'm definitely going to side with the spot, because spot guys can't get liquidated. And obviously when you're shorting the market, you have to keep adding margin to keep raising your liquidation price or your stop level. And consequently, once those players get stopped out, they're actually forced to buy back, consequently adding additional buying pressure. And that's how you get these big spikes up. So that's essentially what you can see over here. Some of these shorts are obviously giving up. You can see that this is starting to move back towards the upside, and open interest has moved up, but it's actually not that high. This can still move a lot higher, which is interesting. It basically suggests there's still a lot of fuel left in the tank for price to squeeze a lot further. And this time, something different has happened over here. If you look at this chart over here, you have Coinbase spot delta over here, and then the cumulative volume delta on the bottom. And essentially what this suggests is that Coinbase have actually been driving the price higher, or at least Coinbase buyers, not Coinbase as a company, but people purchasing Bitcoin using spot on Coinbase. And usually in the prior runs, it's been Binance. Binance now seem to be chasing what Coinbase are doing, which is pretty interesting as well. Here we have the volatility chart with the Bollinger Bands as well. So the BBWP, we could see it was squeezing to extremely low levels. Because this move started to go up, the volatility indicator on the bottom started to also move up with that. Yesterday, if you go back on the video, you'll remember there was a big blue line that was printed over here showing extreme levels of contraction. So far, this is looking like takeoff. It didn't make it all the way to the bottom. It's now started to move back up. And so far, it is looking like a confirmed signal. We need probably one more daily close to suggest that the expansion is going to the upside. But as long as this candle closes above the prior one, which is similar to what I just said on the previous charts, then you would expect that this is going to continue to expand to the upside. And remember, the BBWP can continue on up all the way towards the 100th percentile region, similar to this. So look at the prior run, what happened over here. Let's just zoom out. So if you look at the prior run, coming off extremely low levels like that, that led to this entire move up until we printed red, right? You could have something similar. You can imagine that would lead you probably into the 40K region, which is pretty high targets. Now, the only thing that the only bearish sign that I have over here that could potentially play out is the PO3. So what is that? It's the power of 3. It looks like this. Just quickly make this a bit bigger for you. So I'll quickly draw it out. I think this is unlikely. I'm just quickly showing you what could potentially happen. So you'd be looking at this, right? What happens is price usually moves through a consolidation period. Then you go into what they call manipulation. Manipulation could potentially be that. And then after the price has been manipulated for a bit, then you go usually into full-on distribution back to the downside. If that did happen, so it's not my base case. I'm not saying this will happen. But if something like this did happen, I actually think it would just be an opportunity for you to load up again at that 25K level because this is a strong zone, which we expect will eventually in the future be tested, right? Because that was the prior range high and it's been up only since. So yesterday, let's quickly clear that up over there for you. Yesterday, we outlined that price was operating within a bull pennant. And bull pennants, if it broke out of the pennant even to the downside, it didn't matter. It was still a bull flag. Bull pennants and bull flags have a high probability of breaking to the upside in line with the direction of the move. That being your pole, the measured move of this pole takes price to $34,000. Here's your flag, right? Or your pennant. And I said, even if it breaks out of this pennant to the downside, it doesn't matter. There's still a lot more support here than there is resistance to the upside. And I would take the support more seriously. And either way, you would still have your flag, which has a measured move, which is going to break out all the way up to that $34,000 region. So that's kind of where we're at. Remember though, failed moves that happen. So when you have a pattern like this that is starting to play out, which it is, you have, of course, the pennant. If it does come back down in line with what I just showed you as the power of 3, then failed moves usually reverse very hard. So that is how that power of 3 would play out. If prices start to come back down below that 28,800, then you have a confirmed fail with at least this breakout would be a failed breakout and prices will come a lot lower. So guys, that's pretty much about it. Please make sure you check out OKX's giveaway as well. If you do want to win a Tesla, or you want to win 2 Manchester City tickets, or 7 nights in the Maldives, which sounds fantastic. If you made some serious money, you can buy yourself nice cocktails there. Then consider entering the competition. All you have to do is click on that link over there, join, take a trade, and you're in. And I think that's about it from me. I hope that you all have an absolutely stellar day and trade safely out there. Cheers for now.